I've taken a short position on Aussie dollar prior to the unemployment and prelim GDP news, so half an hour before that. My main reason for entry was price came up to this high, has been holding this level for the last 4 days. I know the order flow is bullish, and ultimately I expect price to take out this buy side liquidity. We've also come into a inverse fair value gap on the daily time frame, where price previously tapped and dipped below all the way down to this low, and we've come there again yesterday, held, and then we've come back up there again on Thursday today. On the 4-hour time frame, one of the main reasons is because we formed a channel. If you can see here, we have a really good channel forming right now. Further confluence is this RSI divergence coming into that high. What makes it even better for me is the fact that whether you want to look at it from here or you want to look at it from this high right here, both still channels for me. It's the fact that we put in a doji candle, price has come up, it's failed to close above this high. In the previous session, it's put in a doji candle at that 50, fair value gap, inverse fair value gap, came into the highs of that inverse fair value gap, and ideally I want to see a bullish close on this candle, and ideally on the 240 I want to see a bearish engulfing candle. Also the fact that this channel starts off as a range. If you look at this is the accumulation phase, so you want to call it, and price is currently manipulating that range. So yeah, for me, also the fact that price is held this level at first, put in this small consolidation, dipped below, took out this fair value gap, and then closed up with this strong bullish candle, and then failed to follow through, is one of the main reasons that I'm looking for a short, especially now that if we close below this fair value gap, this bullish fair value gap, I will be even more confident. But we already have so many other confluence playing in play that I feel confident taking the trade at this high right here, where we had a price failed to make a retest. After that, we took out liquidity initially on the 5-minute displacement, and then we failed to make a retest, and then further displacement with market structure shift. And also we had this bearish fair value gap right here during New York session, the blue line, the blue highlighted area as New York session, and I entered right there. I have given myself a lot of breathing room, mainly because it's quite aggressive trade, and I do anticipate price to at least come down to these lows. It's just a 1-to-1. Ideally, I think price can come down to these lows as well, or even these lows here. However, I will be taking target ones at these lows and then let my trade run, just because I want to see how this plays out during the news. I'm only risking a very small percentage of my account as well in this, because I'm entering with an aggressive method. It's not back tested, and it's something that I've just been watching and learning along the way. And one of the best ways I've realized for me to learn is to be actively involved in the trade, journal, reflect on that journal, identify the similar kind of trades that I've taken in the past, and form some kind of a model around that. And usually I'll wait for further confirmation. I do trade channels, and I wait for further confirmations, such as a market structure shift, which currently is happening. I would normally wait for price to provide a market structure shift, ideally close below this fair value gap, and then I'll enter on the retracement at 618. So this can actually come down if it closes below that 60-minute bullish fair value gap, come down, push back up, and then come back down if the price action is to hold in that direction. So let's see how this plays out. So as the news came out, price pushed up and cleared out the rest of the fair value gap that we saw on the 5-minute, and then we started to see displacement down to my target 1, which I took off at this level. Right here was target 1, which was a 1-to-1, so around 0.5%, and I left target 2 down to these lows at 1.5 or 1.6%, which was hit also at the same time. As I was saying, I was expecting price to come up to this inverse fair value gap and hold and then push back down. However, we got the push below before price could come up to that high, and then next day we get a pullback exactly into that fair value gaps 50%, and also that daily time frame inverse fair value gaps high as well, and find resistance. This was during London session. That price finds this resistance at this high, and then it starts to displace down. And then on Friday we end the day like, well, we're trading the day New York session like this at 10:30 a.m. New York time. Seeing price react, coming back up to the fair value gaps high, and then displace with this bearish engulfing candle, which comes after this bearish engulfing pattern, by the way. So the doji followed by a bullish candle, followed by a strong bearish engulfing candle. As I was saying earlier before my trade as well, it turns out this was the pin bar doji candle followed by bullish candle, and then we got the bearish engulfing candle. And now I would expect the draw on liquidity to be down here, so maybe next week. I don't think we'll get it today. Price comes somewhere in the middle here and then pushes back down to this low. Yeah, all in all, it was a good trade and a good analysis. And also for future reference, even though price took out this low here on the 60-minute time frame, on 240, also a fair value gap. Price, coming into this inverse fair value gap, especially with this bearish fair value gap here as well. After clearing out such a strong point of interest, end of the month, so many confluences, buy side liquidity, inverse fair value gap. It's not unreasonable to look for trades at these highs. Like I said, I also like the fact that there was an aggressive push up at first before price paused and started to displace, and that's something I look for on lower time frames when I'm entering. However, on higher time frames, I tend to not look at them as much, so there's something to consider and add to my toolbox. And then pull back, especially after taking liquidity above this high as well, tapping into the fair value gap and then displacing down. Yeah, this is another good trading opportunity which I wasn't looking at that much, so but it's still something to consider in the future. And that's the trade review.